Joining me right now is Labenthal Global Advisors President Dominick Tavella. Dominick, it's good to see you. Thanks very much. All of this news is having investors expect a much more aggressive Federal Reserve. The futures are now pricing in an 80% probability that the Fed raises rates a full percentage point at that upcoming July Fed meeting, now a week and a half away. Your thoughts there and how this market would react to such a move?
I think it's highly unlikely. What this Fed has done from day one is try to telegraph to the markets exactly what they're thinking and exactly what kind of action they want to be taking. It's highly unlikely that they're going to do more than 75 basis points. I think that's written in stone, but I don't see more than that at this point, Maria.
Well, I mean, maybe, but didn't Jay Powell a couple of weeks before he raised the Fed funds rate by 75 basis points said 75 basis points was not on the table? Okay, so, they've been telegraphing what they're doing except for that.
Yeah, and then they leaked out that they were, that they were going to go to 75. So we might hear some rumor mill, and certainly some of the Fed governors are at least throwing out there the idea of 100 basis points. But I'm guessing 75, and a lot of that has to do with the data that we saw yesterday is backwards looking, and obviously the number was horrific. It's been horrific month over month over month. But I think going forward, that data is going to hopefully start to improve a little bit, and hopefully that takes some of the stress off of the Fed and the markets, quite frankly.
All right, David McDowell, jump in here.
I just wanted to just quickly point out, Dom, the issue yesterday was, and we talked about it as soon as the number broke, core inflation is picking up steam. Core inflation came in hotter than expected, and it came in higher month over month than it had been in the 2 prior months. I think that the reading on it was 0.7% increase month over month when it had the 0.5% increase had been forecast. Again, hotter, not cooler. That's the central issue. And we're already in a recession, essentially. So talking about how, it's the question should be how awful and long will this recession be? Not if we're going to wind it up in one.
Let me just focus on the inflation question for a second. So clearly a month ago, we can look at where oil prices were per barrel, gasoline prices were. But in the last 45 days, we've seen oil off by over 20% lower. Prices of copper are at historic low. We're looking at things like lumber, commodities, material, even agricultural, with what's going on in Ukraine. Most of these commodity prices are lower by over 20%. Look at what's going on in the real estate market. Some of the hottest markets in the country now have rolled over and prices are starting to decline. So I am not predicting that inflation is going away. I think this is going to be sticky, and I think we're looking at pretty high numbers, but even year end. But I would not be surprised that next month's number is going to be lower, substantially lower than this month's number, and that trend, I think, continues through the end of the year.
All right, I want to talk about earnings because second quarter earnings are going to take precedence here. We're getting J.P. Morgan numbers out in 30 minutes' time. We will also get Morgan Stanley earnings out later this morning. Dominick, let's talk about the estimates here. Okay, the consensus expectations for J.P. Morgan is $2.91 a share. All right, the range is from $2.65 to $3.19. So there are some estimates, Dominick, that go all the way up to $3.19 a share, but the consensus is $2.91 on J.P. Morgan. Analysts are expecting the company to generate $32 billion in revenue for this 3-month period. But what's most important, I would say, is what Jamie Dimon is going to say about the macro story and about how much money they may or may not put aside for bad loans. And, that's one thing that certainly was a factor last quarter, how much money they're putting aside. What are your thoughts on the J.P. Morgan quarter?
I think that you hit the nail right on the head. I think that's the issue. We know the capital markets haven't been great. Asset management, if assets are lower, your fees are lower. Interest income is going to be a little bit higher. So overall, it's kind of a wishy-washy quarter. But how much money are they going to put aside for reserves? Now, remember, beginning of the year, we were looking at them releasing reserves and improving the bottom line profit. Now they're actually putting money away for reserves. So it's that number that I think affects the bottom line most dramatically. And so I think the earnings are not going to be stellar, but that's because I think they're banking money, they're putting money in reserves for future losses.
Yeah, because what did Jamie Dimon tell us a couple of weeks ago? He's expecting an economic hurricane, and as a result of those cautious comments, that the bank would be much more conservative with its lending. And by the way, I'm looking at some earnings reports. I'm looking at some analyst reports this morning. They expect a strong trading quarter. Yeah, it was a very busy trading quarter. We know that. So maybe the trading part of the business comes back a bit. We'll see. But we'll be watching, again, $2.91 a share is the estimate on earnings, the consensus on $32 billion in revenue. Real quick before you go, Dominic, would you buy stocks at this point? Given the market's down 30% on the NASDAQ year to date, what kind of a second half are you looking for? And is that a reason to look for opportunities here or not? Stay on the sidelines.
25-30% cash in our portfolios, and we are looking for opportunities. I just think it's a little early. But I think this summer the opportunities will come when that inflation number hopefully rolls over.
All right. What, 30% cash? Big number there. Dominic, good to see you. Thanks very much. You're watching this market cautiously, obviously. Dominick Tavella joining us. Dow Industrials now down 311 points. We're 20 minutes away from the J.P. Morgan earnings report. You're going to want to be with us with that.